Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Brian H., Jackie A., Dave V., and Todd A. We have a returning guest on the program today. Mr. Leif Nilsson is back on the program to update. Leif is the Chief Executive Officer of SURG Copper. The company is advancing a number of various stage projects in British Columbia, Canada, with its core focus on the PFS stage Berg copper project, which is advancing through pre-feasibility study work as well as resource expansion, as well as the nearby Ootsa copper project, of which both project areas surround Imperial Metals' Huckleberry mine. The company also has regional exploration projects in the same area. SURG Copper is listed on the Toronto Venture Exchange under the symbol SURG and also on the US OTC markets under the symbol SRGXF. Mr. Nilsson, it's good to have you back on the program. Welcome.
Yeah, thanks very much, Andrew. I'm grateful to be back. I'm a fan of the podcast, so looking forward to the conversation today.
Well, Leif, you're too kind on that. Appreciate the comments and glad you might check in on a couple of our episodes on occasion. So always appreciate that, and thanks for listening in. Well, why don't we talk about SURG Copper today and get an update from you? You guys are quite busy on work at the Berg project. Why don't you start off here by giving us an update on progress so far and what is expected to be completed by year end?
Yeah, no worries. So the work program this year at Berg, and just to kind of orient people, it is seasonal work at Berg, or it has been for recent years. So it tends to be very summer focused, just for some of the kind of practical reasons around access and kind of weather conditions. Elsewhere in the district, we from time to time do engage in winter drilling campaigns, but up at the Berg deposit itself and to the west of the deposit, where a lot of the infrastructure siting is planned for the project, it tends to be, summer focused programs. So we got kicked off in the kind of mid-July this year, and planning for the program to run through to the end of September, maybe a bit into October. Several different objectives that we're sort of running to ground. They are all kind of really in the spirit of tying off certain data sets in advance of progressing a pre-feasibility study for the project over the winter months. So going in order, we're doing some final resource drilling, which is, focused on converting some of the inferred blocks in the resource model to measured and indicated primarily. Of course, you always get some new, grade information from that, and you'll see some changes in the grade estimation in areas of the block model. But a lot of the planning for those holes is really primarily focused on conversion of inferred to measured and indicated. Probably a lot of your listeners will know the importance of this, but when a company moves from preliminary economic assessment to pre-feasibility, you can't make use of inferred tons in the mine plan. So it's kind of a big step in maturity in terms of that piece of the puzzle, is that the production schedule and a pre-feasibility will be all derived from measured and indicated resources, which then underpins initial reserve declaration. So we think we're in a good spot there. Post the 2023, which is the most recent resource estimate, we've done a fair bit of drilling over what will now be 3 seasons, 2023 up till the end of this year. So the database will have quite a bit of new information that will go towards that inferred conversion. The number of holes this year for that purpose is it's not tremendous. We've completed 3 holes for about 1,500 meters. We may see some additional of these inferred conversion holes done later in the season when we finish some of the other drilling that I'll speak to in a moment. But on top of that, we're also going back to some historical core from prior operators that's predominantly focused in the center of the deposit. People who know this project well. The mineralized zone has sort of a donut shape to it, and the center of that donut, it is weakly mineralized. It's not, considered waste in the context of the mine plan, but it's much lower grade material, has lower drill density in areas, and a lot of this drilling was done well back in time. And so we are undertaking a very small program this year to resample a lot of that historical core to just upgrade the just sort of contemporary modern QA/QC procedures that will allow us to use that data for category purposes. So it's already used for grade estimation of the deposit, but there's a bunch of inferred blocks in the center there, which, if we don't get those converted, would otherwise be treated as waste in a PFS mine plan. So progressing quite a lot of that stuff. Resampling old core is a very efficient, inexpensive way to do that. So time will tell when we get to the final resource what the overall impact of that will ultimately be. But we're feeling, and looking at the internal analysis, feeling pretty confident that the conversion of the inferred material in the PEA mine plan to M&I will we'll see some significant progress there. And again, some added context, in the PEA mine plan, the percentage of that material that was inferred was only about 20%. So we're not talking about some massive, we didn't have to completely transform the resource model, covering 50% or so of the tons. It was about a 20% volume that we were looking to convert. And, we're pretty confident that we've hit our marks on that. The other objectives of drilling that we're completing this year, first up is a dedicated geochem program. So there's some drilling focused on characterizing the waste rock tons in the open pit volume. So this is to better understand acid rock drainage potential, metal leaching potential, etc. So again, this is really outboard of the mineralized zone. It's an area of the deposit that, for obvious reasons, wouldn't have a lot of drill hole density historically, because nobody wants to drill waste until you're kind of into the phase that we are in. So we have a pretty unique program going on involving the use of underground drill rigs, which are being anchored to drill roads and drill pads on the side of the sort of slope that the deposit sits adjacent to, and we're drilling those holes at a negative angle, so they're kind of heading uphill effectively, and giving us very good kind of data coverage over huge swaths of this waste material at the outskirts of the open pit shape. So very efficient program, just under 2,000 meters across 4 holes. Pretty challenging style of drilling, so that's kind of one of the areas that's required a fair bit of attention from the team to get that done. But we're most of the way through that program right now. And then lastly, we made a very, I would say, important mineral tenure transaction or deal at the end of last year, where we entered into an option agreement with a private group to give us the option to acquire 100% of a couple claims that sit to the west of the Berg deposit. That area is basically where a lot of the infrastructure for the project would sit. So the tailings impoundment facility, as well as the mill and concentrator itself. So this field season was really our first opportunity to really start to do geotechnical investigation of that area. So pretty extensive program going on there. About a dozen holes. These holes are really not meant to be characterizing, anything in the bedrock. It's sort of testing the thickness and bathymetry, if you will, of the overburden cover, and then getting a handle on the rock mechanics within the first several meters of bedrock. So these tend to be pretty shallow holes, kind of on the order of 50 to 70 meters. And again, we're probably 3/4 of the way through that program. In parallel with that, there was a big seismic program done across that tailings basin as well, to bolster that kind of imaging capability, modeling, understanding of the shape and distribution of till and sort of overburden cover in that tailings area. So kind of clear to see how all these are pretty fundamental technical inputs and data sets for a PFS. So we're very pleased to be progressing that program well. It's run pretty efficiently. We're pretty confident that we're going to get the answers that we need by the end of the field season. And yeah, I think it's been a great year so far. No real assay results out yet from any of the holes drilled. Obviously, the important ones from an assay perspective are going to be the resource infill holes. As I mentioned, it's not a huge number; it's only 3, but that will be from a news flow perspective. There will be some, typical drill hole style news to come from us later in the year, albeit none of that should be considered, super material. This is infill drilling in a deposit that already has a measured and indicated resource in excess of 1 billion tons. So it's kind of just adding data density to that picture.
Lots of stuff happening here. I encourage the audience to go take a look at the company website and also some of the layouts and models that have been put in there. Some pretty good information there on the website. So encourage the audience to take a look at that. Looking forward also to seeing what we have here as far as some of the conversions. I think it's going to be probably right on to what you guys have been able to turn out in the past based on last conversions. Also will be good to see some of the drill results coming out of this as well, the geotech work, etc. So sounds like all ahead full on this PFS work. What would you say to the audience as far as potential timing for that PFS, Leif? Obviously, it makes sense to do the administrative work on this over the winter time and get that put together, but when can the market expect to see that?
Yeah, we're looking at early next year, and we'll probably put out some formal disclosure on this in the coming weeks as the field program reaches its conclusion. As I just described, certain aspects of the program this year are really our first view on certain attributes of the project around, tailings and various things like this. So we really wanted to uh, de-risk or kind of cover a bit of a fatal flaw analysis on some of that before providing pretty granular commitments and guidance around the PFS. But as I just described, I think what we're seeing is what we expected and what we hoped for. So we'll look to refine some of the timeline information that people are naturally curious about in the coming weeks. But yeah, at a high level, it's sort of certainly going to be in the first half of next year.
First half 2026 sounds good on that front. Just as far as timing, I know it's early days here, but speak to what you can as far as after the PFS comes out, would it be your plan to immediately start addressing things going into the feasibility study? With that, I suppose we better just wrap it into environmental assessment work, pre-permitting work, which you guys are working on as well. Talk about that.
I'd probably try to frame it for people as when you think of these studies and we have these like very familiar mile marker studies along the journey, PEA, PFS, feasibility study. There's kind of 2 sides to these things. One side is the evergreen technical physical data that I think underpins design choices and ultimately goes into uh, the economics and the cost estimation and all that stuff. And so that on the PFS, that's what we've been working away on for the last couple of years. We had this very, I think, significant announcement recently on a big MET program that was, part of that PFS journey. So that's the kind of information that is, it's evergreen. It's not a snapshot in time. And so post PFS, there's going to be a kind of a similar dichotomy where there's going to be some desire to further de-risk and further define things from a technical physical data perspective. And there's no sense in delaying that. You want to get kind of right on top of that as soon as you can. I think for the studies, the actual published results that maybe market participants are more familiar with. There's a large degree of those things that are more snapshots in time. The cost estimation, et cetera. Some of the final design work that goes into that. And I think the further down the road you get, definitive feasibility is usually it precedes detailed engineering and so forth. There's a bit of an interplay or tension about how is that study being done by the group that is preparing to make a construction decision themselves, et cetera. I think for a massive porphyry copper project like Berg, it goes without saying that's a bit of a different situation than a smaller project, small gold mine type situation where we're going to necessarily want to focus on the evergreen technical data that future prospective partners are always going to want to see, and permitting is a big part of that as well. So I think post PFS, like our focus is very much going to shift towards really advancing the social license kind of government permitting pathway in parallel with let's continue to de-risk a bunch of the evergreen technical pieces of it. I think in terms of putting out a flag on we intend to deliver definitive feasibility on this project by X date, that should be less of a focus for us and the market for several reasons. I think the permitting journey is something that even in the most optimistic scenarios that are being discussed in Canada right now is still a multi-year undertaking. And so, rushing to get feasibility numbers out into the market is, less important. You'd end up in a situation that, there's lots of projects out there that have feasibilities in place, but the companies that are, really in charge of, prospectively building them would need to update those prior to, sanctioning that investment anyways. So a bit of a long answer, but I think the crux of it is post PFS, the real focus for us is going to be really starting to make progress on the permitting side of things and figuring out what attributes of the project from a technical data perspective needs to be further invested in as a priority.
I think that's absolutely correct. I mean, it needs to be exactly those de-risking measures collectively permitting and also the technical de-risking aspect. Best way to go here. And the actual formal study itself will come in due course. But of course, there's lots of milestones between PFS and FS to land on that will also increase the attractiveness of the project. Market conditions, discussions with potential acquirers, partners, etc., because it is a large scale project and one that I think will probably be growing in attractiveness here as the market continues down the road. Definitely will be on the radar of folks that are operating in British Columbia. Any specifics as far as environmental assessments, general pre-permitting work, anything else you want to cover on that?
Well, I mean, we have been active in the field for the last few years, gathering baseline information for those purposes, and the footprint of that activity has expanded beyond just the deposit footprint into this infrastructure area in the valley to the west that I alluded to. The vendors of that tenure, even prior to us securing the definitive agreement in December, we were in negotiations with them, and that allowed us essentially to complete a fairly fulsome program last summer for environmental baseline in that area. So we were pretty pleased to be able to advance things and not lose time in that area. So yeah, I think our data set, our kind of internal reporting is moving along steadily in terms of getting prepared for that type of engagement around the EA process. We haven't kicked that off formally yet. There's a fairly bright line threshold where you file certain documentation with the regulators to start that process, and of course it's iterative. There's a lot of requests for information, and sometimes those can necessitate additional field programs to satisfy those things. So we're aiming to get that process started in parallel with the delivery of PFS essentially. So, but yeah, I think we're in a good spot from an EA readiness perspective there.
And good also to be in nearby existing operations or operations that have ran in the past. That's a good thing here, just as far as when it's looked at from a permitting lens. Plus, you guys have a good land tenure in that area as well. Just to remind the audience here, especially for some of the new audience, the current copper resource in process of updating, walk us through that a little bit here as far as where we stand on the resource. And then also, I think it's important to bring up the byproducts. And with that, you guys continue down the road here. There will be resource growth. We would expect that to happen. To what extent, we don't know, but certainly that'll happen. We might as well talk a little bit about recoveries as you go through this as well.
The resource model is, again, from 2023, and there's been 3 seasons of drilling since that time. It's a pit constrained resource, so the block model itself, from an unconstrained perspective, will extend below the constraining pit. So a lot of the movement that we're going to see from the 2023 resource to the forthcoming one will be driven in part by obviously new data, new drilling that's gone into it, but it's not to be viewed as like, we're not extending something down strike length or anything. It's sort of this is a single large volume that is fairly well drilled off, at least in the top, few hundred meters. The deeper you get, the drill density obviously tapers off, and then you have this kind of barrier of a constraining pit, which is going to depend on several economic factors. So metal prices being the obvious one, but uh, you know, there's sort of cutoff grade math that involves assumptions around reasonable mining costs, recovery assumptions, et cetera. So when we delivered recently, pretty material improvements on recovery assumptions, like that's going to end up ultimately being one of many drivers that will affect some changes on the resource. But where it sits today, again, from a pit constrained perspective, about 1 billion tons, just over 1 billion and 9 million tons in the measured and indicated categories, and that the average grade in that M&I volume is 0.23% copper, 0.03% or 300 ppm molybdenum, 4.6 grams per ton silver, and 0.02 grams per ton gold. There's an additional tonnage within that same open pit constrained volume of 542 million tons, and that stuff's a bit lower grade, so 0.17% copper, 0.02% moly, 3.7 grams per ton silver, and 0.02 grams per ton gold. The kind of separation of those two volumes, measured and indicated and inferred, it's not just a depth thing. It really boils down to drill density. So as I mentioned, we have the mineralized zone. It sort of naturally forms this toroidal donut shape, and the center of that donut is weakly mineralized. And because past operators, didn't want to prioritize drilling into that area, it wasn't viewed as a source of high grade material. It just sort of naturally has lower drill density. And as I mentioned, there's just some kind of technicalities around QA/QC history on some of that older stuff that is, we're allowed to use it for grade estimation, but not necessarily for category definition. So there is some inferred material in the center of the donut that is low grade, but it's certainly above cutoff. And we'll see a bunch of that stuff converted from inferred to measured and indicated this year, which is great. It's sort of, this stuff starts from surface, and again, it's not super splashy from a grade perspective, but it's you want it included in a mine plan for obvious reasons. Maybe just to provide some color on that, the grade there. From a total contained metal perspective, the NSR of this material is quite attractive from a peer comparison perspective in British Columbia, especially when you're talking about bulk tonnage, single open pit, pretty low mining costs, cheap power, etc. We have this issue in porphyry copper, especially in the kind of junior mining side of things, where there's always kind of questions or debates on, what's the simplest way to talk about grade and kind of give people a bit of simple rubric for comparing things against each other. And most people will default to, a copper equivalent type calculation, but it's fraught with issues. It's sort of, investors and market participants need to do a lot of their own work to understand why a lot of those copper equivalent grades they'll see in the marketplace are different from one another. It's beyond just metal price differences. A lot of it has to do with how people are treating recoveries in those equations. But my view as someone who studies this stuff very closely is that kind of grade profile I've just mentioned at the M&I level, where you're sort of in the 0.23% copper area with byproducts of moly and silver in particular that are really high on a global basis, that makes for a metal mix from a head grade perspective that is quite attractive. I'll also say that the deposit has a natural enrichment feature. So There's a weathering phenomenon here where you got, over millions of years, the water table moving up and down, and it has the effect of, leaching some copper from the very tippy top of near surface, and then redepositing it, several meters down, and that effect just gets repeated over and over again over many years. So you have this supergene enrichment zone at the top 100+ meters of the deposit, more or less, and you see pretty significant enrichment in copper there, up to sort of like in our current model from 2023, the copper grade in that area is 0.29% copper, and then the moly and silver and gold grades are roughly the same. It's sort of there isn't a huge enrichment process going on there, but you see roughly same kind of background levels of moly, silver, and gold. So, all else equal, that's what you want to see for open pitable deposits where, the best grades are near surface, and, they allow you just geometrically to be able to front end load some of those better cash flows that you'd expect from those higher grades. So in our 2023 resource model, the volume of that quote unquote supergene material is about 240 million tons, so about a quarter of the resource.
I appreciate you going through that, Leif. Thank you. And certainly here, you guys, with the molybdenum in there, the gold and silver, this will certainly kick quite well into the economics, and I suspect those will continue to play a role going down the road here on all pricing fronts. I wouldn't expect much of this pricing to not go down here given the market. Everything looks pretty good. For comparative purposes, when looking at the grade, I encourage the audience to look at comparable operating mines in British Columbia. Just as a close to home comparable, Gibraltar, Taseko mines, that's certainly one that would be comparable that comes to mind. There are others, of course. This falls in really well, and I'm suspecting that we aren't done with the profile yet, and this will change, of course, in size. And of course, the economics will change as we move into future economic studies and as the market improves as well. So overall, good stuff here. Looking forward to seeing more progress there at Berg. Leif, before we move on here, any other comments on Berg that we didn't cover off before we move on to Ootsa?
I don't think so. I mean, I might just expand on the point you were just alluding to there about, BC, other BC peers, and just the cost environment. So I think I often, when I talk to investors, I often, urge them to focus on grade in the context of the operating cost environment where the deposit sits. And I think with, high tonnage, high throughput, low grade porphyry copper mines, that exercise is perhaps, more important than in other types of mineral deposits and mining. And yeah, when you look at the 6 or 7 operating porphyry copper mines in Western Canada, and you kind of compare them to similar deposits in Chile or Peru, there's a lot of just simple, straightforward, fundamental differences to what drives the cost structure at these different types of operations. And I think people will jump to conclusions around, where is labor cheapest, et cetera. But these are big, energy intensive, material movement type operations. And so I think the bigger drivers really come down to things like power, things like existing infrastructure, access to that infrastructure, and whether or not you need to build it and operate it yourself. And so, just at a super high level, without getting too lost in the weeds, it's pretty simple to see how a project like this in BC, where you can access local highways, Trans-Canada type highways, where you can tie into an existing hydroelectricity grid that has extremely low costs of power, sort of 4 cents US dollars equivalent per kilowatt hour type costs, access deep water ports, and just sort of pay to use them on a tolling basis, et cetera. You can see how that is a fundamentally different set of circumstances that dictate cost structure as compared to maybe something like high in the Andes frontier area, where you need completely different forms of infrastructure. You need pipelines to deliver water from the coast. Maybe you need to build a dedicated desalination plant to do so. There's no electricity anywhere near there. Sometimes recent copper mines built like Cobre Panama or Oyu Tolgoi, they have dedicated power production facilities as part of it. So I think when people look at copper projects and they're trying to compare people look at grades as a proxy for operating margin ultimately. So you need to look at both sides of the coin. The grade dictates revenue, but you also have to understand cost structure. So I think in British Columbia, because it's a first world jurisdiction, because the infrastructure is obviously just world class, it can support much lower cutoff grades and as a result, much lower average head grades. That, of course, doesn't apply everywhere. There are areas of British Columbia, deep in the Golden Triangle where you may as well be in a different jurisdiction. It's, very remote, takes a lot of effort to, pull in infrastructure to those areas. But I think for projects that are close to infrastructure, can prospectively, access that infrastructure without huge elements of the overall capex, things can look very attractive. And I think Berg is such a project, and I think the grade profile of the deposit relative to, similar deposits that are near infrastructure like that is actually, quite attractive.
Good information there on Chile and how things compare and contrast and some of the drawbacks, and of course the positives with some of these jurisdictions. Appreciate you walking us through that. And definitely you're on top of things as far as what's happening out there with some of the peer projects, development projects, operating comparables as well. And of course, and some of these projects, because of where they're located, the infrastructure and those other benefits, they can get away with some of these lower grades. I think another key item as well, investors returning with more appetite to North America, places like Canada, the certain provinces, of course, British Columbia included. Then also you have the US. Some of the policies coming out of there certainly are encouraging folks to look back into the US for mining projects as well. On Ootsa, why don't we move over there for a moment? Another important project, secondary to Berg for the company. Any plans there to finish out the year? I know there were some exploration results that came out earlier this year, back in January, but any other plans to finish out the year? And also, if you want, maybe carry us into 2026.
Unlikely there. So, we did about a $10.5 million capital raise this year. And I mean, to be frank, like that's all going to be earmarked toward the kind of PFS related work programs at Berg that I've mentioned, and then bolstering our working capital to kind of carry us into some of that permitting work that I've talked about there. So we've got the flexibility to look at stuff there, but the kind of strategic angle around Ootsa is, look, it's a sizable resource. It's not as big as Berg, to be clear, but it compares well against the landscape of other junior copper porphyry projects out there, especially some kind of peers in BC that have put out, recent, maiden resources. So this is just to run through the numbers. It's like a 440 million ton M&I resource grading 0.18% copper, 0.02% moly, 0.12 grams per ton gold, and 2.1 grams per ton silver. So lower grade on the copper and moly side than Berg, materially higher gold grade. So I would kind of characterize this more as a copper gold system than copper moly dominant like Berg. And there's an additional inferred resource there of 138 million tons at comparable but slightly lower grades. So all told, you're talking about several billion pounds of contained copper equivalent. So it's certainly nothing to sneeze at. I think there's a standalone development concept that could be put forward there. For a junior company like us, we would want to avoid the pitfall of competing projects that aren't integrated, right? To be out there trying to sell kind of two of the same thing. One is by definition always going to be better than the other, and in a capital constrained environment, you're going to be forced to prioritize anyways. Ootsa is very unique though in that it is situated about 5 kilometers away from this care and maintenance status Huckleberry mine. We're of the view that when Huckleberry ultimately gets brought back into production, that there is, they're just naturally going to be looking at opportunities to bolster their future pipeline of mill feed for that mill. And just by definition, that's going to come from kind of existing resources at the Huckleberry mine itself, in excess of the reserves, potential resources at some of their, regional exploration projects like Whiting Creek, or some of the satellite or regional stuff that we have, such as Ootsa. So this is a very subjective area. Different people are going to have different views, but we feel strongly that these deposits at Ootsa are one of the more attractive options for future satellite mill feed for that mill. So we're hopeful that there's a negotiation at some point in the future to rationalize that in some way, shape, or form. The context, therefore, on the recent drilling we did there. So the last resource, the numbers I just took you through were from 2022. We have actually done quite a lot of drilling post that year. So we were out doing a lot of regional exploration across the district in the summer of 2022 and later. This sort of followed on some fairly strategic investments we made in like a regional ZTEM survey, et cetera. So we view this as a big district play. There's a much bigger kind of contextual picture here. And in recent years, before we got kind of really focused on advancing the Berg project, there was some, I think really smart exploration investments we made across the district. And as part of that, we made some sort of brand new discoveries of zones in and around the Ootsa resource. So one of them is a pretty attractive copper gold zone to the northeast of the Seal deposit that I don't think it's got huge tonnage potential, but it's some of the highest grade stuff we've seen in the area, and it's just copper gold only. There's no moly phase in it, so to speak, and the grade profile of it is quite attractive. So in the context of this material, maybe one day serving as mill feed for Huckleberry, that's the kind of stuff that can, if you find some material, doesn't need to be huge volume, doesn't need to be a standalone project, but if you find some near surface, simple metallurgy, copper gold material that's like 0.2% copper, 0.2 grams per ton gold, that can be pretty high value material to feed into a local mill. So there was some follow up drilling done last year to chase after what we had discovered there a couple years prior. We liked what we saw. There's again, I don't think there's massive tonnage potential. We're not talking about a new porphyry center discovery with billion ton potential, but there's definitely a zone there that is not included in the current resource that certainly has follow-on exploration potential. So, is there an opportunity for us to put out a resource update at Ootsa to capture the additional drilling done in the last few years after that resource? Maybe, but it's not a burning priority for us given what we've got going on at Berg. Our holding costs there are low. There's a lot of investment that's been done there already. We've advanced metallurgy quite a lot, and again, I mean the owner, our neighbors there, they're actively investing in things. They haven't made any formal declaration on restarting the mine, and I think the main reason for that is just they got bigger fish to fry with some of their other operations at both Mount Poly and perhaps more importantly Red Chris. So there's a huge expansion going on at Red Chris that most people are aware of. So when that operation and the expansion there is fully bedded down, it would make sense for that management team, that company, to really investigate what the sensible next steps are at Huckleberry. But in the meantime, they are maintaining it, they are making exploration investments, et cetera. So it's the kind of thing where it doesn't really make a ton of sense for us to push too hard there and be spending huge amounts of exploration dollars at the expense of diluting our shareholders' interest in Berg. Like, we like what we have at Berg. There's a very good kind of standalone asset there, but the story as it relates to Ootsa and its prospective integration with Huckleberry is it's a chapter for another day, but I think that day will inevitably come. So we try to maintain good dialogue and positive relationship around that.
I think that makes sense, Leif. It's all capital on deck, all hands on deck for Berg, of course. And, in market conditions that are more favorable today, I can see definitely the ability to advance in parallel this project as well. Potentially something there as far as divestment or partnering with Ootsa. So I think it makes sense to certainly keep it in the portfolio. It provides a pipeline and it's a good value add. And certainly the conditions today in the market are much better than back when Huckleberry was suspended. So I suspect Imperial will get back around to it. However the approach goes, you guys have an asset there that can be potentially monetized to support Berg as well. So there's lots of options. When the capital comes in better and you guys can allocate a little bit more budget to exploration work in the future, I think that makes sense as well. I encourage folks to take a look at the proximity. Both of these projects are quite close together. Leif, with that regional exploration, I want to ask you a little bit about this. I know it's not a priority either, but did want to cover what the potential is here. You guys have a large land package in the area. Any targets potentially that are popping up for you guys for potential 2026 testing?
Our approach to regional exploration is, again, we're not in need of resource tonnage to pull into a economically viable project concept. I think we have that in spades already. You'll appreciate that when the psychology of a big mining company looking at opportunities like this is, I think they want to have the beachhead, they want to have the anchor, project that kind of makes sense to enter an area to potentially, make a substantial initial investment and to kind of keep them, build up a workforce, invest in relevant, operating expertise in that jurisdiction, local relationships, et cetera. And I think they want to see a pathway to future expansion opportunities or, new discovery opportunities where, if the initial project feasibility shows a 20-year mine life, a lot of these kind of, big diversified mining companies want to see blue sky arm waving potential to be there for 50 years, right? So we don't necessarily view it as our job to go out and fulsomely drill test every single showing or opportunity here, because to be clear, we've got a huge land position which is also just strategically valuable in and of itself. So we're very happy and proud of this tenure we have, like big, almost 150,000 hectares of contiguous mineral tenure in a established copper mining district, porphyry copper belt, all in good standing with the claim status pushed out as far as it can be, and very minimal royalty coverage on it. So it's a very very clean, solid tenure. And in this area, again, there's a belt of kind of identified, known, well-defined resources, whether you're talking about Berg, our Seal deposit at Ootsa, the Huckleberry deposit, Imperial's Whiting Creek deposit. So this is we're not really waving our arms when we're talking about a cluster of porphyry deposits. It's kind of there and pretty well defined. And it's an area that has till cover. It's got trees on it. We got lots of photos on our website that show that, but it just goes without saying that this is a little bit different than the high Andes, where you can see in some parts of the world, you can see these types of systems because their alteration footprints are very visible. They're easy to do some initial recon on. I don't want to take away the complexity of exploration at some of these sites. Like obviously there's still transformational discoveries being made in those areas of the world. They're not all sticking out of the ground, of course, but I think where we are is it's got that extra layer of cover. So it's not you have to be systematic. You have to use geophysics, and then you have to get on the ground and do soils and ground geophysics, and map the geology, et cetera. So we've made some, I think, early in that process, but sort of systematically important investments in geophysical data coverage across the area, and then sequentially going back to what we think are attractive, prospective targets, covering those with IP grids, covering those with soil grids, and doing some drill testing. So we had a few, I think, important campaigns of that style of work in, the sort of 2021 to 23 timeframe. Again, with market conditions and just sort of where we are at on our journey with Berg, we've really narrowed our focus on that. But we do have a very interesting story that we're already able to tell with regards to some of these regional targets. The economic context of how they would fit into a project like Berg or a project like Ootsa or something like that is not yet clear, but I don't think there's a burning need for us to figure that out yet. I think there's regional targets like the Burgett prospect, some of the other ones in that kind of northern area like Cibola and Sylvia that have real big potential. And if something major was discovered there, it could have a satellite concept to Berg, or it could be something entirely standalone, or it could be something that would be analogous to Ootsa that could potentially serve as satellite feed to an existing mill in the district. So those prospects that I've mentioned are very lightly tested. There's a few drill holes into them that show either economic style grades or confirmation of porphyry style mineralization, or just evidence of significant alteration zones. So there's a good pipeline of this type of stuff in the district, but it's not again, I think we're sensitive about diluting our shareholders' interest in what we see as a hugely valuable asset at Berg that isn't really being properly valued in the market. So I don't think we want to go and overspend on those things until we have better recognition for what is on the table already at Berg. But that being said, when we're out in the field and we've got the kind of fixed cost base of a actively running camp, it's low stakes, pretty easy decisions for us to make, to have field geologists, going out and doing some prospecting type work on those prospects. So we typically do advance them a little bit each year. So to really get to the answer on your question, so will we potentially test some of those targets this year or early next year? We might. We haven't really rendered a decision on it yet. So the financing that we've done this year does give us that added flexibility. I think we've got more working capital than what is immediately allocated for the PFS program I've outlined. As to whether we want to allocate any amount of that to a small program at something like Cibola or Sylvia is to be determined, but we certainly have the flexibility to have that as one of the anchor activities in the field, perhaps next season while we're advancing some environmental and feasibility work at Berg.
Yeah, I think that falls in just about right. As you guys get into the permitting times, which could be times of less news. So I think it would make sense potentially to tie in some exploration work during that time and continued de-risking, continued confirmation as well. I think that would be when it would make sense, and when the market conditions merit such, just to demonstrate that Berg is the focus and that's where the value is to be created, no doubt. But you guys do have a pipeline, and that's what I want to make sure the audience understands and establishes, that there are multiple options on project pipeline. So good information there. On capital structure, I'd like to just have a quick update there. You guys did raise money earlier this year, a few months ago. Just talk about where we stand on the shares outstanding, where you would expect to fall roughly, Leif, on cash balance post work program at Berg this year, and then also key shareholders on the roster.
Yeah, sure. So we announced a $10.4 million financing in July of this year, and it basically had two components to it. One was a public offering. So this is what the terminology used for this nowadays in Canada is a life offering. So it was a private placement, but under a prospectus exemption that allows for the stock to be free trading. So that was a $5.9 million component. That was all the places there were typical market participants. So a mix of institutional investors, high net worth individuals, existing shareholders, et cetera. That portion closed at the end of July. The other portion, which is the exact same commercial terms, it's all the same price, common shares, no warrants, et cetera, is a follow-on investment from an existing strategic investor, which is a diversified mining company headquartered in Johannesburg, South Africa, called ARM, African Rainbow Minerals. They made an initial investment last year, April 2024, to acquire a 15% interest in the company. Their participation in the financing this year was a negotiated feature where they are going to increase their interest from 15% to 19.9% at the close of that piece. That tranche hasn't yet closed. It's just waiting for an outstanding regulatory approval in South Africa, which is just sort of standard for these types of transactions. I would note that there's a recent transaction involving Harmony Gold acquiring a copper mining company called MAC Copper. Required the same type of approval, orders of magnitude larger in scale, and that approval was just granted about a week ago. So I don't expect this to be an issue, but it just sort of takes a few weeks to get through the plumbing. So we are anticipating that will complete in mid-September. At that time, so pro forma the closing of that final tranche, the company will have 345 million common shares outstanding, no warrants outstanding. The only dilutive securities would be RSUs and DSUs and options that are used through our stock compensation plan for directors, consultants, advisors, things of that nature. So on a kind of fully diluted basis, that would be 374 million shares outstanding. So at the kind of current price where it's bouncing around today, around about 18 cents, that would translate into a fully diluted market capitalization of about $72 million Canadian. The cash balance basically today, so this is again pro forma of that extra piece coming in mid-September from ARM, is about just under $10 million. So that number is obviously going to be so that would put us at a current fully diluted enterprise value of $62 million Canadian. And obviously, at the end of the PFS work that we're doing, that cash is going to be depleted a bit from there. But we've got a very good cash buffer that will take us, well into next year and perhaps beyond, depending on what we commit to from a work perspective. So, people will take from that what they want. But I think a $72 million market cap for what we own today, what we're progressing, is it continues to be an outlier in the market. There's all kinds of potential reasons and speculation about what causes these sorts of disparities in the market. But I'll say that when you're in small cap land like we are, they aren't efficient markets. There's a lot of players who just don't tread in these waters, and so that can kind of create these valuation disparities and let them persist. But I just continue to think that what we are delivering at SURG continues to build very attractive value, and the investment opportunity in the equity that that people can look to is it just continues to be very attractive.
Appreciate you going through that. I think to some extent, still in this market, a value gap persists a lot longer, and it tends to tighten up a bit as you get into some of these development stage milestone achievements. Certainly as well, permitting progress, approvals, big hurdle, and then these other things that start to happen with some of the milestones being assembled, more construction finance package coming in as well. So it seems to be that a lot of it's stacked on the back end, and this back end of the development curve is where investors tend to take more and more notice. But I do think as the market heats up, that'll start to change and come forward a little bit as well. Leif, short of anything else, any market comments you have here, but I'll also just tie this in with wrapping up here. For potential investors who are listening in, the company has a market capitalization of about 60 million Canadian dollars. Why should SURG Copper be considered within the institutional, family office, and retail investors' portfolio at this stage?
Yeah, my refrain on this is the metals that we're exposed to have excellent fundamentals. So copper, molybdenum, silver, and golds, they each have their own story, but I think the supply and demand outlook for these metals is very positive and increasingly so. We're in a fabulous part of the world to be doing this type of work. Geologically is one part of it, but also the above ground issues around infrastructure that I talked about, social license, et cetera. I think that's a huge part of the risk equation for these types of assets, and I think the playing field that we have there is outstanding. And then so that all speaks to value, and then value is what you get, price is what you pay. I think on the pricing side, as I just outlined, it continues to be attractive. These types of assets that when you're talking about 10 billion pounds plus of copper equivalent in the ground in a sort of economically rational situation that shows strong promise for future development. I won't go through a list, but there's a lot of currently trading assets or transaction examples involving big mature companies where these types of assets are trading hands at implied values of hundreds of millions of dollars, if not billions. So I think we have, very dutifully and steadily over the last several years started to lay out the pieces of that puzzle and made the fundamental case for that value, and the market recognition is yet to come. We're going to continue keeping our head down and doing that value added work and getting the message out through these sorts of conversations. So eventually, we are confident that our value will prevail, and there's going to be a market recognition opportunity. So that's what people who invest in these sorts of things are there for. So I think it's a great opportunity that continues to shine bright.
And for further information, Leif, how can interested parties reach out to the company?
Yeah, we're active on both LinkedIn and X. So we've got corporate profiles there under the name SURG Copper. I myself personally am active on LinkedIn. Look me up. We've got an info at account that makes its way to me if you're interested with some questions or want to get in touch with me. Info at surgecopper.com. And our website, surgecopper.com, outlines a lot of the information we discussed. I'd particularly point people to our PDF corporate presentation that we probably put the most detailed analysis and up-to-date information in.
Leif, thank you for that, and also for coming back to update. Looking forward to speaking again more around results and also around pre-feasibility study next year. Thanks for the time.
Absolutely. Thanks so much.